We're going to discuss today on how to become profitable in the stock market this year, 2026 and beyond. So the first thing that we're going to consider is this one. Number one, make a strategy and master it. Now, it's good that you're going to have a strategy because every time that you're going to trade, that would be your guide when you're going, if you are in the proper entry and exit. And you have to develop a rule-based approach that you're not going to trade if it's not in the rules of your trade. Like for instance, the way how I'm going to trade, I'm going to wait for the market to pull back, and I see to it that I am at a discounted price before I'm going to buy, and check also if that level is uh, that is a demand level where institutional investors are buying. Just like I'm going to have an example for you. So this is my example for the BPI, Bank of the Philippines. Now, look at the structure of BPI. So this is my rules. Every time here, let's say it's now going up, this level going up. So I'm not going to buy somewhere here, but where should I buy when it will going to pull back? This one. That's why I put here buy. So we're going to hold our position, and then here maybe some of our positions we're going to sell. Half of our position we should always sell when the market is already high, or we'll just leave at least 20% of our position. Like this one, sell here, and then add your position in this level. But if you are a long-term investors, then you don't have to worry about that one. Just have to wait. If the BPI, just like this one, if too high, then that's the time that you're going to sell, like somewhere here. And by the way, we're going to check first if this is the all-time high already. What was the all-time high before? We have to compare that one. We're going to top down. We have our top down analysis in our weekly. So this one, this was the all-time high before in 2018. The price was 113, and this one after the pandemic, we are now here, 2024, 149. So this is what I want you to do. If that's too high, maybe you have to leave your position from your position at least 20%. Then just let the market run it with the market, whether the market will going to go down or go up, and at least that you still have an investment for that. And if we're going to go down, then you have to add your position, just like this one. Maybe you have to add your position, although this is a little bit high, but you just have to minimize your position. Yeah, let's one. Just minimize your position in this level. At least you're going to buy because this is a bit deep pullback in terms of this here demand of this level. Okay, so I bought in this level, but not too aggressive. But if BPI went to this level, this far, then I might be aggressive in this level. So I'm going to monitor the movement of the BPI. Okay, so our rule-based approach is every time the market will going to pull back, then that's the time we are going to buy, and it should be in the level of that where there is a demand level. We're not our strategy, we're not going to buy based on our emotions, based on the news, but we will always check if it is within our rules, within our strategy, and we're going to master that one. That's why that is the number one rules, and we have to master our strategy so that it's very easy for us to trade, and we don't have to think too much. If we are familiar, we are master with our strategy, and we apply that based on our role-based approach. Okay, so we're going to go back to our presentation and market strategy and master it. So this is what happened. If you master your strategy, it's very easy to hit this one. If you're an archer, it's very easy to hit the target board. Look at this one. I hope that this is what the archer is doing here. He hit every time he released the arrow. He always hit the target board. That's what I want you to be. It's very easy for him to target that one if you master your strategy. And let's go to number 2, risk management. Risk management is very important in trading because we want to preserve our capital. Preservation of our capital is the number 1, and we want our money to grow. So how do we use this risk management? Like for instance, as a beginner, you need to trade only 5% per stock, or 3 to 5%. You have to be conservative. Unless that you are well experienced, you understand already the ins and outs, the intricacies of the market, you have a deep understanding, so you can put that at least maybe the maximum of 10%. But if you are new to this business, I recommend that your maximum will be 5%. So let's say 100,000 your capital. So you have to buy Ayala 5. If 5%, 5,000 only. SM 5,000. So you have to diversify your strategy so to minimize risk. Because in stock market, we really don't know what happened to the company. Although every company, just like BDO, BPI, they have been proven that for how many years they're going to go up. You can see with my example that BPI is really going up. So that's good. That's really good. That's why investing in the stock market is a long-term process. It becomes profitable if your approach will be a long-term, because over time it has been proven that the price will going to appreciate. So that's why 5% per stock, and then you have to, if you are new, you only expose 30% first of your capital. Let's say 100,000, so 30,000 you will invest that one. You have to choose, and then you have to choose companies that are stable, with just like Jollibee. First you have to trade Jollibee, Ayala, SM, BDO, BPI. Those are my recommendations, stock recommendations as a beginner that you're going to invest. Then as you go along with your investments, if you become experienced, then maybe you have to trade to other stocks also, because there are also companies really performing well aside from those companies that I really mentioned. Okay, so risk management is very important to us. You don't need to overtrade your capital. We need to be conservative, and timing, and when you're going to trade, that's what I discussed to you a while ago with BPI. Okay, so this is a very important. We need to grow our money. We don't want to lose our money. So risk management. Number 3 is keep it simple. Just like the one that I discussed to you a while ago in BPI, that I'm just using the price action. At least if you're going to use other indicators, at least more than at least less than 3 indicators. I think do not go beyond 3 indicators, because if you have so many indicators, you might find it very difficult to analyze. It might result to analysis paralysis because you have so many considerations. But if you just keep it simple, just like the one that I discussed to you with the BPI, just like this one. So very simple, and you just have to maybe one moving average, this one, to check if where is the this one. We'll go to the daily time frame to check if it's bouncing in this level. 50 is a simple moving average. 50, let's say, just like this one, it's now above 50, so this is an indication that there is a change of direction during the downtrend. Here there's a breakout here. Instead that it will going to bounce in this level, in this 50 MA, it will going to go down further, but it broke this 50 MA, and then it's now above 50 MA. So this will only to check with our analysis with our price action. Confluence, this is only for confluence, but our main analysis is we will going to base that in our price action. And that's why we just have to keep it simple with our analysis, just like this one. So it's very easy to have our entry when we don't have more indicators. So we'll go back to our presentation, this one. Keep it simple. And number 2 is mindset and psychology. And this is a very important in when we're trading. We don't need to be emotional when we're going to trade. We have to focus on our analysis. Sometimes because of the psychology, we're scared because the market is going down, and we're going to sell instead that we're going to buy more. That's why it's very important that we have to understand the movement of the market, the behavior of the market, because that's the time that when the market is in downturn, we're going to buy. If you are not familiar with the stock markets, of course you will get scared. You will be afraid, and you will get panic. So mindset, psychology, you have to consider that one, that we will not get scared because we are spreading our positions. We are fully diversified. Whatever happens to that company, we're not scared. It's because only 5% that we are allocating. That's the most important thing, that we really have our risk management when we're going to invest in the stock market. And number 5 is fear of missing out. That's FOMO. That's what we call it. When everybody is gaining and they're posting in their social media, in Facebook, that they are having a big gains, then we don't need to follow them. It's because we might be buying at the high price. What we are going to do is to check with our strategy if the market is pulling back, and then that's the time that we're going to buy. Fear of missing out is because you might not be able to buy again. It's because the market is too high already. So why we're going to buy, and all of a sudden the market will going to go down, and you will incur losses. That's why it's very important that we don't do this one, FOMO. We have to be focused, wait for the market for the right opportunity. We have to wait for a high probability trade. Then we're going to trade. That is our part of our strategy. We need to have a high probability before we're going to trade, because in our risk management, we are investing because we want our money to grow. We don't want to lose our money. Okay, so fear of missing out. And number 6 is invest in yourself. Don't forget to invest in yourself, just like this one. You are listening to me. This is good that you are going to consider this one, my YouTube channel, to listen so that you will learn. And then you're going to apply to your own trading plan and master your strategy. Because if you cannot master, I don't think if you will become profitable in your trading journey. And this year 2026 and beyond, that's the only thing that you're going to be profitable in the stock market. I hope that you're going to follow this one, strategy, and master it. And then this 6 is very important when you're going to trade. And I could guarantee you that if you're going to follow this one, these 6 strategies that I've been discussing, you will be profitable in the long run. Because I've been doing this one. Actually, I started trading since 2012, but I can say that in only 7 years, I have a solid understanding of stock market. Other years is more on experimenting, because at that time 2012 is the references we have. We don't have that much compared to this today, this year, that we have a lot of references. We can use comparison, but at that time limited, so I could only say that my solid experience in trading and understanding is only 7 years, although I started for that year 2012. Okay, so I think I still have a bonus for you, that this is also very important. The last thing that I'm going to discuss to you is my bonus. This one, don't invest in scams. Okay, scams is how to identify if it is scams when someone is telling you to invest and you're going to ask their money that you will be the one to invest for yourself. Don't do it, because that is a scam. Unless if it is a company, then you know the key people. They're giving you the address of the company. They're giving you the key people. These are the key people, and really, this company is existing, and they are registered in the SEC. Maybe they are an investing company, so I think they are not scam. But people who are you don't know, in just like in Facebook, in your GC, someone is telling you that, asking you where is your money, then I'll be the one to invest because it will grow in a week or 1 month, it will double or triple. That is a scam. Okay, don't believe that, because trading is you're going to trade in a long term if you want to become successful in trading. And then you follow this one. You have to follow these 6 strategies rather than believing those people that your money will going to double in a week time, or in 1 month it will going to double your money. Okay, so you can now understand if these 6 strategies are not being discussed in the people, that person inviting you. So that is the scam, because we need to follow these 6 strategies for you to become profitable in the long run. So I wish that you will be successful in your trading journey, and let me know if you still have clarifications. I'm going to down below, and then I'm going to respond to you. Okay, so I hope this has been helpful, and don't forget to hit the like button and subscribe. Bye for now.